Okay, perfect. All right, go ahead and take yourself off, Terrell. Hit the live, and then do the 30-second countdown. Desi, this is straight off the cuff, so I ain't got no questions prepared for you. So we're gonna give it to him live.
All right.
What's up, guys? So I got something very special for you today. I got my old friend Desi from high school, who is a life insurance agent now. Uh, we're going to talk about some life insurance. Hopefully, you guys, take his advice, his warnings, his anything he gives you is gold. I'll be really honest with you. So, what's up, Desi?
Hey man, thank you so much for having me on here, man. Nice talking to you again, and hopefully we can bring a lot of value to everybody listening. And any questions, they can reach out to you or me, and pretty much go from there.
Absolutely. I don't know how many people are watching right now, but typically the videos get between 100 to 200 views. So, and after this video is shot, it'll actually get saved in the replay. So, I mean, anything we say on here, people watch later. Hopefully, you can get some, clients on here. And I do remember you were saying that most of your clients you're dealing with now are truck drivers, right?
Yeah, man. A lot of people that I help are actually truck drivers.
What um, what typically do you like? What does a general conversation with a truck driver go? As far as like what he's looking for, what you think was best for him? Because I mean, you know, uh, I've been studying for my life insurance policy as my license, that some of my
Mhm.
viewers know. But like, so I might know a lot of terminology that a truck driver just out here on the road might not. So like, can you give it a breakdown what that typically goes, how that goes?
Yeah, man, definitely. So, pretty much with every client that we help, is we go through a financial inventory, right? So the financial inventory, we pretty much look at gathering information based off of their income, if they're married, single, any medications that they're taking, things like that, and also any medical conditions. Because with life insurance, is based off of qualifying, it's based off of your health, anything that's happened in the past. And the cool part about that is that we're actually work with so many carriers, that even if you've had a certain condition in the past, we can find a different carrier that won't accept it, but we can find one that will, right? So we're always able to kind of encompass every little thing. But my the thing that I like so much about truck drivers, as far as a lot of the clients that I have, is that they understand the importance. It's not really for me. It's not something that I'm trying to sell them. I just tell them, "Hey, John, my name is Desi. This is what I'm going to do. I'm going to ask you a few questions. I'm going to ask you a few health questions, and we're going to see what we could get you qualified for." I show them the options. They tell me how much they want, and we go ahead and submit the application, get that approval. As far as a few other people that we talk to, we have to look at not really on persuading them to get something. They already know they need it, but it's not really something that they want to make that movement just yet. And I feel like with truck drivers, they know how urgent it is because one, they're on the road a lot. And I think that that's kind of like they already understand and know. A lot of people, even they have life insurance through their employer, driving trucks through their employer, they offer that life insurance. The downside of that is that pretty much if you retire or you get sick, you can't no longer work, that coverage is going to go away. And what we
Yeah.
look at is something that's more permanent for them, that even after they retire or even after, God forbid, knock on wood, something happens, they're still going to have that coverage after, right?
Right. I do like from the training I've been doing, something that gets, thrown around in the training a lot is insurability and and being underinsured. Because I know with these group life insurance policies that the trucking companies offer, I mean, from what I've seen just in my career, they're between like maybe 40 to 50,000 and sometimes even under 40.
Oh wow,
But yeah, it's not
that's
great,
low.
but it's something, you know what I mean?
Right.
And I think that's kind of what people that are like in the company driver position, which I am in, but it's
Mhm.
1099, but like let's say Swift or CR England or something like that. I think I think Swift is only like 50. So
Okay.
I mean, if something were to actually happen, that's just going to give the family like a little bit of a buffer, not even like it's not a long-term thing. Uh
Right.
just to kind of give you like an example of what I have set up for myself is I have a revocable trust that is the beneficiary of my life insurance policy. All right, sorry about that. Just one second.
Good.
Uh, but you know, it's the beneficiary of my life insurance policy, and I have certain stipulations set up to, basically like when I die, they will receive, and I have a trustee and all that. They will receive, my beneficiaries will receive $1,000 a month, basically. And I do
Okay.
have subsequential life insurance policies for like, this is for my wife, this is for my kid. It is sorted out, but
Yeah.
like I'm a little more esoteric than say maybe the average truck driver. I'm not trying to say
Mhm.
nothing, but I don't, when I start getting talking like this, a lot of truck drivers just look at me like, "What are you
No,
talking about, man?"
it's well planned. Well planned, man.
Yeah, I try, but one of the things I think that I probably would have had a problem with is like, okay, my company, I'm a regular W-2 truck driver. My company is offering me $40,000 life insurance policy. Do I need more than that?
So typically, how we look at everything, and just a standard, you want to look at least 2 to 3 years income replacement. If you have children, if you have a wife, anything like that, right? So let's say you're bringing in, let's just set this example, 50,000, right?
Mm,
So 50,000 a year. I'm sorry, you're bringing in 50,000 a year, and let's say you have 50,000 now through the coverage. Perfect.
mm,
So then we will look at just adding 100,000, because that provides at least 100 grand, which pretty much adds up to about 3 years or so of income replacement. Because we also have to look at, one, do you have a mortgage, right?
yeah,
So
exactly.
if you have a mortgage, then we might have to add a little bit more. In a lot of the families that we help, typically there's one primary breadwinner or a higher income from the primary breadwinner than the other one. So then we look at making sure that we're replacing that income, as well as we help with the mortgage protection too. So it helps in covering, one, the mortgage. If something happens, the home would be paid off, and just add in that little buffer in that time period, because the surviving spouse, husband or wife, is going to have to come up with a little bit more money to continue the same lifestyle if they wish to continue that. And I
You
think
brought
that,
up a.
go
Go ahead. I'm
ahead.
sorry. Go ahead.
No, no, no. That's I think that that's pretty much what people don't really think about, as far as when they die. It's like, okay, just bury me or burn me, right? $5,000,
Right.
$10,000, that's all it takes. But it's a lot of other little things, and that's really what we try to make sure that we understand, and put our clients in the best position we can, based off of their current situation, because everybody's different.
Right. Just real quick, before we continue the conversation, you lagged a little bit, not much, but
Mhm.
if you do start lagging on your end really bad, just turn off your camera, because the camera does eat up a lot of data, even though we're doing this as a kind of studio setup. But you brought up a really interesting thing. So when I started studying more on this in the insurance license, I came across Survivor. What is it? Survivorship life insurances.
Mhm.
I don't think a lot of people know about that. So like, could you? Because and you've been in it a lot longer than me. I'm just studying right now. But would in a situation like that, one, could you explain the difference between a life insurance on an individual, say me, and then the survivorship life insurance, which is the the husband or wife type of thing. Just kind of go into that because people don't know about that, and because I brought it up a lot and they just don't know.
Yeah. So there's two differences on, if you get an individual policy or a survival. It's either a first to die or last to die policy.
Yeah.
Typically what we look at is doing an individual policy, because some of the survivorship policies, what it means is, let's say me and my wife are on one policy, right? And let's say if it's a last to die, or something, let's say it's a survivorship, and one of the clause or the riders is last to die. If my wife passes, well, I'm sorry, let me not go. I'll put me.
So
I'll
yeah.
put me. So I'll put me. So if I pass away, my
I like how you're
wife's not
thinking
gonna.
with that though.
Yeah,
I plan on being here too,
yeah,
man.
right.
But go ahead. Go ahead.
But so if I was to pass away, if we have the survivorship, and it's a last to die, so if I pass away first, my wife could potentially not receive anything until she actually passes away, and it would go to our beneficiaries, right? So
Mm,
that doesn't really help her if we're both together on the same policy, because then it's not inclusive to one individual proprietor. So then it kind of makes it a little bit more difficult. So
okay.
whenever it's husband and wife, we look at doing two individual policies, because if one policy lapses, then both of you lose coverage, right? But if you have two individual ones, one lapses, at least the other one still has coverages.
That's fair.
And
That
and
that
and
yeah.
we never know what could happen, from 1 year, 5 years, 10 years, 20 years. If you get in an individual policy and something happens, and oh yeah, let's just cancel it. Now you're kind of stuck, right?
Yeah.
But I mean
Let's go into
that's all
that.
something. Yeah.
Let's go into that because I'm sure you kind of watch what's going on with the economy too.
Mhm.
And typically, when the economy starts taking a downturn, people start looking, okay, well, what can I cut? Uh, like in your own words or own thoughts, w- if that does happen, let's say some of our viewers get a policy with you today, right? Um, and something happens, and their bank starts, their money starts going awry, and they start looking to cut costs in their life. What would be your recommendation for them to keep that policy? Because to me, that is one of the most important things, like I have, because I'm on the road. And I'm gonna be really honest with you. I'm gonna give you a little bit of information on truck drivers. We're spending 21, 22 hours a day just sitting down or laying down in the back. I mean, even if we work out, we're really only working out maybe 2 or 3 hours a day with a
Yeah.
light moderate walking. So like our health is our, I don't care how any truck driver, their health is not like as top as it could be. You know what I mean?
Well, mhm.
So like how important is it to have life insurance?
Um, to be 100% honest with you, man, I think it's very important, but I can't convince someone to think that it's important, right? I think that
Right.
that really has to come from them. And as far as with everything that's going on right now, the only thing I could say is that what's important is that we get some form of protection in place that's affordable long term, right?
Right.
Like I've had so many clients that, especially people that are a little bit on the older side, right? So we'll say 70 or plus, right? Um, but we work with final expenses, and I ask their income because I want to make sure that I can find something that's affordable for them, right? So that if they're telling me that their retirement is 1,500 and their pension is 500, so they're bringing in 2,000 a month, they got a mortgage of 1,200, and they got to pay these other things, and they want to get a policy that's $200. Like, hey John, let's start off a little bit lower, because what's important is that you have it long term, right?
Right.
And
Yeah.
instead of taking as much as you can now, and then 1 or 2 years saying, hey, you know what, I can't afford this, and just canceling altogether, now you're left without coverage. Your health could be worse, and now you potentially couldn't even qualify, right?
Yeah.
As well as the price is going to be higher. So what I always look at is making sure that I show at least three options, right? The
Mhm.
option that's pretty much going to take care of everything that you're looking for, or actually a little bit more. The middle one's gonna take care of everything. The other one's gonna almost take care of everything. There's gonna be a little bit remaining, but pretty much it's all almost there. And then that way you can pick from the three, right?
Mhm.
Because it's not one size fits all. And the thing is that you can always start with the lower amount, and as things change, as things progress or situations change, you pay off credit. So many people tell me, hey, I want to get more, but I'll just start with this. I gotta pay off a credit card, or I gotta
Yeah.
pay off rent a center, right? I gotta pay something off, and it's okay, perfect. Listen, whenever you're ready, we can always increase it as long as your health hasn't changed. It's no problem. Um, but a lot of the things that we spend on, man, is really unnecessary too, right? So I mean, I buy things that I don't. Well, okay, I'll say I, right, but my wife shops on Amazon
I do
like
the same
every
thing.
day. Every day, I can't hide that one, right? So like every other day we get a package on Amazon, and it's like we don't need that, so it's like, if we're looking at something, let's say starting off 30, 40, $50. I mean, we probably spend more on food, right?
Yeah,
$50 and
absolutely.
two 2 days that we go out a week, boom, $50, right?
You're a truck driver, you upping that a lot.
Yeah,
Uh, I mean, we as truck drivers get a per diem of like $50 a day, but I mean, to really be honest with you, man, I could spend $100.
easy.
I could probably and probably about. I'm gonna be generous myself. Probably 2 days. I'm gonna be generous. I can,
That's not
But
bad.
anyway,
Not bad.
it's worse. But anyway,
But yeah,
um,
but I mean that's something that it doesn't mean that you have to give up everything that you're doing, right? Like I'm not here to take food off the table or anything.
right.
But there's certain unnecessary things that we buy, and it's really what you prioritize more, right? So if you want to prioritize making sure your home is covered, your family's taken care of, or your kids are taken care of, your wife, whatever the situation is, your mom, like I have my mom, my sisters, my 3 kids, my wife. So it's something that's very important to me, and to me, what's most important is just having that legacy behind. Whether
Yeah.
something happens to me, I want to make sure that they're not in a bad position. And it's not to leave them rich, but it's to make sure that they're not gonna be changing a whole lifestyle and selling cars and moving to a smaller house or anything like that. It's got to keep the kids where they're comfortable, because I didn't have it, so I want to make sure they do.
They do say, a lot of people like Robert Kiyosaki and a few other people, the easiest way to leave generational wealth is literally just get a life insurance policy.
Oh
Something
man,
above 100,000, but like that's like the probably absolute simplest way. And I think we get caught up in a lot of that. Is like, okay, generational wealth. That means I need to go work myself to death. I mean, you could just have a life insurance policy, and then and
bro.
it could change that family's life.
Dude,
Unfortunately,
it's so crazy that you brought this up, because it's actually something that I wanted to talk about, but not necessarily here, because I think it could stir up a few things, but
But hey, man,
so
look, this right here. This is stuff people need to know. Like if they, like this platform is also for this interview. I mean, is also for you, man, to like shout out your company, give information that
yeah.
we might not have. So go ahead and do your thing, man.
No, for sure, for sure, and it's not something bad, but it's more on the generational wealth. Like my ethnicity is Mexican, right? Mexican,
Same. Got that. My
and
granddad.
so
¿Qué
the
pasó?
thing is that, right,
Oh my
the
gosh.
the thing is, man, is that our communities, bro, and I could say lower income to or there's not really a middle class. It's more of a low middle class and a high middle
Mhm.
class, right? But the low
Yeah.
middle class to poverty, really, a lot of this life insurance isn't really something that goes on or is really talked about, and I think it's more because
Mhm.
from generations to generations, nobody really thinks about them, and like nobody really puts in the time or effort to really look at how it works. And one of the problems with that is that it's not really publicized a lot on it, right?
Yeah.
So the people, like, one generation keeps getting wealthier and wealthier and wealthier, while our generation keeps staying in the same boat.
Yep.
And it's because of that education, right? And I think that, dude, we can change that. but it's just really on everybody understanding exactly how it works. And even if I don't, you know, reach to where I want to reach, I know that my family is going to have whatever they need. And if they want to go and open up a business with that, they can open up a business, but at least they
Yeah,
have that availability to do so, you know?
yeah.
Because now we kind of get caught up in the same thing. And it's
With
just
that
a
being
cycle.
said, what was that?
Yeah, I'm sorry. And it's just like a cycle that is going to continue
No,
the
it
same
is.
unless we change it.
I little story, a little bit of a story time. My granddad died a few years ago, on my mom's side, which is the black side of my family, and uh, but basically he didn't have any life insurance, and I mean we couldn't even to be really be honest with you, man, we couldn't afford to bury him. No headstone, uh, nothing, and the only reason that he even really got a burial, and it was like and he also got one of those like little metal uh
Like
real
little
small, probably like no, yeah,
yeah.
for the gravestone thing. And I'm sorry, let me roll that up because he's real loud. Sorry about that. My great grandfather, opposite to my mom's side, uh, I might be explaining that wrong, but he came in and paid it for us, and then he ended up dying a couple years later after that. But he was an old military man, so he had his stuff paid for. But it like my mother, I remember seeing my mother cry because she could not literally afford to put her dad in a grave. And when that happened, I decided to get a the survivorship policy for my other grandparents, and because it really rocked our it kind of rocked our world. And I
Yeah.
hope that other family members, because I mean, like he had 13 brothers and sisters around the same age, not same age, but between the 13-year
Right, right.
difference, uh, and they were watching all this. So I really hope they took heed to what they saw. But no, I like, and that's why I wanted to bring you on, because like life insurance is like really important, especially to me, because like I just things I've personally lived through. Um, but like kind of to touch on that with the whole generational wealth thing, to be able to afford it, like what would you recommend, a whole life insurance policy or a term life insurance policy, and what is the
So
difference?
yeah, so what's really cool is with the I'm gonna explain both, and there's not really one answer. There
Right.
it might be better for you to get a whole life. It might be better for you to get a term life. There's also term lives with return of premium, which are really good.
Yeah.
Um, but first, let's go ahead and talk about a whole life. So a whole life is pretty much something that's permanent. It's going to be available for your entire life as long as you continue making those premiums. You also accumulate what's called cash value. It's a little bit slower depending on the policy you go with, but there are some policies that could get you up to a 6% return, which you're kind of using as an investment too. Um, but on those policies, if we structure them correctly, you could use them for retirement. You could withdraw whenever you need to, any emergencies. You also build cash accumulation. Most do have what's called living benefits. And I know we were talking a little bit about it before, man. So the living benefits, what it means is, let's say for this purpose, you get a policy that's $100,000, right? So on that $100,000, let's say you get a heart attack or a cancer and you can't work, right? So you can actually withdraw part of those funds, part of that 100,000, to be able to help replace any income that you lose
I remember reading about
while
that.
you're unable to work, right? While you have that cancer, while you have that heart attack. God forbid you get a terminal illness, which means the doctor tells you have 12 months or less to live. You get an accelerated death benefit. So you pretty much get a check with your full amount that you can go ahead and use, pay whatever you need to pay, visit whoever you need to visit, make memories, and make sure that everything's taken care of because now you already know that time is coming, right?
Okay.
Um,
Let me pause you real quick though. Uh, you're breaking up on my end a little bit. I don't know if the stream on YouTube is doing that. Go ahead and turn off your camera, but you can keep talking though, for sure. Okay.
okay, so it says right here, stop mic cam. Do I stop
Yeah,
both?
just push. No, not both, just the camera. Sorry guys, this is live, so you know what it
No,
is.
no, you're good. You're good. Okay, got it.
There you go. There you go. And we can still hear you. So go ahead
All
and
right,
continue.
perfect. Yeah. So yeah, so that's pretty much on the whole life. On the term life, it's pretty similar. The only difference is that you don't really accumulate cash value. And you only have it for a certain set term, right? So you can get a term life for either 15, 20, 25, or 30 years. And after that term is up, pretty much the policy the policy ends, which it offers the same benefits. It offers the living benefits as well. So a lot of people that have mortgages normally look at getting a term life, because let's say, for example, they owe $200,000 on their mortgage. They just bought the house. We look at getting a 30-year term. 30 years later, the home is paid off, the policy ends, and now you're pretty much covered the home. Your kids are now grown up. So it's really on making sure that we're finding the best way to for every different situation. The term life, a lot of people don't know this, and with the term life, there's a regular term life, and there's also a term life that gives you your money back at the end of the term. And what we do a lot. Go ahead. Sorry.
No, I just said ooh. Like I'm sure people like to hear that.
Yeah. Yeah, man. So it's like after the 30 years or 25 years or 20 years, whichever one you select, you get the money back. And you could use it. You get a check for that full amount, and you could utilize it however you want. If you want to go buy a boat, car, finish paying off your car, or anything else, you could do whatever you want with that money. Um, Go ahead.
Is that the one that the premiums increase as the years go up, or how does like can you break it down like how
Yeah,
that exactly works?
yeah. So on the one that I'm referring to, no, the premium does not go up. On the
Okay.
one that you're thinking about is Index Universal Life.
Oh, okay, okay, okay.
So on that one, the premium goes up over time because it's based off of your mortality.
But not
And
the one you're talking about. That's totally different
yeah,
one.
yeah,
Okay.
it's a different one. But yeah, on all the products that we have, the premiums are level, so it's never gonna go up on you.
Okay.
And with some of the term lives, we can get you the money back. There's a few companies that are able to do that. And with it also includes a lot of accidental death benefit riders, which really, God forbid, something happens in an accident, it'll give you an extra 25% to 50% from your death benefit. So if you were to get, 100,000 in regular coverage, it automatically adds another 25,000 of accidental. So if something happens in an accident, it'll pay 125.
Okay.
Um, but one thing that we do a lot with the mortgage too, with people that have mortgages, we kind of work a little bit backwards. So we look at um, an illustration on the mortgage for 25 years. We look what your remaining principal balance would be, and then we go ahead and divide that by 25, then by 12, and then we get what your monthly premium would be, and then we go ahead and set up a policy for 25 years. After 25 years, you get all the cash back. You take that money, you pay your mortgage off, and you save 5 years of interest as well. So that's something that a lot of people like that we do too.
Yeah.
Yeah,
I don't
man, it's
know a lot
pretty
of
cool.
people that know about that, man.
Yeah, man, it's pretty cool. And I mean, you pretty much save on the 5 years worth of interest. And it's
Yeah.
something that we could definitely help out.
Okay. Look, we're almost at the 30-minute mark. How about this? Uh, let's how can people reach you like to contact you? Actually, let me say it like this. Because there's truck drivers all over the country that'll be watching this at some point. Um, can you only help people in the state of Florida, or can you help all over the state? I'm just curious, or all over the country. I mean, just
Yeah,
curious.
so I'm licensed in 13 states. Um,
Perfect.
but
Okay.
if I'm not licensed in a certain state, then I'll be able to get someone that will be able to help. So it's not a
Perfect.
problem. We have a team.
Okay, how can people reach you? If you want, you can turn it back on your camera if you want to show like a card or anything. We should be able to get that done because like people need to talk to you, man. Seriously.
Yeah, man. I don't have a card on me right now, but I can definitely post my digital business card on one of the links here for your
Yeah.
video,
Yeah.
and my phone number. Go ahead.
Go ahead and use the private chat setting, and then my host will put that in in the live chat and everything. You
Okay,
know.
awesome.
Yeah. But as it will as we'll keep on talking. For your younger guy, like let's say somebody who's what is it, 23 now. I think they lowered the or have the age to, maybe it's 21. I'm not sure, but let's say it's a rookie coming into trucking, healthy as could be, as an ox, as they like to say. um should he get insurance? I mean, because I know some of our friends, back in the day, they had kids pretty young. But let's say a new cat is coming in the game, don't got no kids, or does have kids. Should he even be thinking about life insurance? Because I'm at 21, I definitely wasn't.
No, definitely, and I think one of the things is that the younger you are, the more affordable it is, right? So if you start younger and you start investing into it, by the time you're what 50, maybe less, well 30 years from now, you're gonna have a pretty good amount of cash flow, that you could withdraw whenever you want. And it's not really for I'm not gonna die now. It's what am I gonna do for my retirement?
Yeah.
So you could look at it both ways, and I think a lot of the younger people, also too, they don't really see a lot of the value because you're young. So we actually have one
Think
of the
they invincible.
companies, right? I think we all felt like that too, right? So I
Yeah,
can't
I
I
did.
can't blame them. um, but pretty much with one of our companies actually, John Hancock, if they're able to qualify, would actually give them an Apple Watch, based off of their activity. So
Oh.
it's like a life insurance that pays or that gives you an Apple Watch to be active, to be healthy, and you
Oh.
still have life insurance coverage, man. So it's crazy, man. There's so many products that a lot of people don't know out there, and we just want to make sure that we educate and make sure everybody understands.
Yeah. You familiar with Patrick Bet David with PHP?
I think I've heard of PHP, but not that specific person.
Yeah, he has a YouTube channel called Valuetainment, and anyway, that's kind of what he used YouTube and other social media platforms to basically promote his business, and he has like a what is it, LM a LM a ML,
Yeah,
whatever structure
yeah.
it is. But that's how he grew, because he started in, like, I want to say 2008, and used social media to grow his company, right?
Mhm.
Something he touched on the other day was, I guess, because people are freaking out about the recession coming, or is here, or whatever, right? Whatever is happening. Um, I guess he had a board meeting, and people were freaking out because typically what we talked about earlier, they canceled a life insurance policy because they're trying to cut costs. Um, one of
Right.
the he said, "Don't worry about this. What we're gonna do is we're gonna get a $25 gift card for all of our customers to Starbucks, and write a handwritten letter saying, hey, we just want to let you know through this struggling time, we're this and we're that. Your next coffee is on us, right?" And
Hmm.
it was very interesting, because I'm like, just the fact that he thought about that, and like
Right.
like you're saying with the company that has the Apple Watch or whatever, right? It really kind of shook me, because that's something to me that with the Apple Watch, yeah, I'm I'm gonna hold on to it through whatever comes. You here, take my money. You know what I mean? Like,
Yeah.
like I felt like Fry from Family Guy. When he was doing that coffee thing, man. It was very interesting. And you saying that, the these people really need to keep the life insurance for one. And also, guys, I'm through my channel. I promote my hazmat course of affiliate that I have. Uh, you know, I'm not a life insurance agent yet. That's why I brought Desi on here for you guys, so you can have as much information as possible uh, going forward, and say, hey, you need to start thinking about the future because this life is very unhealthy, and it can send us to our early grave. Like, if I'm not correct, Desi, the life expectancy for a truck driver is what, 55 years old?
For a truck driver specifically, I couldn't say right now, but for males in general, it's lower than females.
See, yeah, and trucking is definitely more male than it is female.
Right.
So, but anyway, so something I talk about on my channel, right? Um, it's a certain strategy, a tax strategy that I came across that I plan on using this year. And I kind of wanted to get your thoughts on it. Um, Basically, I've heard this once before. I'm implement it this year, but basically, when, like, say, because I'm a 1099 driver, right? So say
Hmm.
we're gonna talk about owner ops right now for in this particular example. Um, with people that are 1099 and have to, keep their taxes in line, keep their receipts, so on and so forth, kind of uh, deal with the IRS in a more intimate way than, say, a W-2 person would.
Right.
Um, the strategy that I've been talking about on the channel is, if you're a 1099 guy, and so let's say you're looking at a two to $6,000 tax bill, right? I
Mhm.
suggest that you buy a life insurance policy. I typically say whole life. I don't know if you can do it with term, but maybe it's something you can discuss. I'm not sure. You buy a life insurance policy through your LLC or S corporation or even a C corporation, but you have to hold it in the entity to be able to get the write off held on you. Do you have any knowledge on that at all?
Yeah. So if you not okay, so not specifically on the full tax write off for, like, 6 grand or anything, but
Right.
if you're, like, let's say, paying an insurance, like, you're a truck driver, right?
Right.
So if you're paying for a life insurance policy, it doesn't even matter if you use it under your LLC or not. On the actual policy, it asks if it's individual or for business, right?
Okay.
So we can select for business, and whatever amount you pay into it, like, let's say you pay $100 or $50 a month, the total
Right.
comes out to 1200 a year. You could write off that 1200 on your taxes because it's an insurance, and you're on the road a lot, so it's something that could be a hazard, right? But as far as writing off 2 to 6 grand or anything, that's something that I could definitely look into and get
Because
back to
as
you
as
with
an
some more.
expense, as
Yeah,
an
it's an
expense.
expense. Yeah.
But you're saying you can do it as a that there's a section that stipulates insurance?
Yeah, so on the life insurance policy, whenever we submit them, it
Mhm.
asks if it's for individual, if it's for um, individual for self, or if it's for a business purpose, right? So we
Okay.
can select for a business purpose. If
Ooh.
if the IRS decides that they want to audit or anything, the
Right.
policy was taken out on a business purpose. So now you pretty much have that to cover all ends.
See, okay, so with that, what I would see, just from my own background, some of my viewers know this, but from my background, see what I would do to make sure that if there ever is an audit, you're doing it in the business to negate any, trickery that, because, I mean, let's be honest, guys, like, I'm not gonna be too political with this because I could go in here, but 87,000 IRS agents over the next 10 years, what do you think they're going to be doing?
Hmm.
So I definitely like, that's a nugget that I did not know. That was a piece of gold right there. But I would definitely hold it in the LLC, and or S corporation, whatever you're gonna do. But what I'm seeing a lot of guys doing, they're creating their LLCs, and then like dissolving them after a certain period of time. And if you're gonna do that, you have to you have to transfer that to the new entity or to yourself. Uh, so with what you just said, I definitely want to make sure the viewers understand, if you're going to do that, make sure it is in the LLC or the corporation, whichever structure you're setting up. If you're going to do it on the business side, to have
Mm-hmm.
that write off or that insurance, as you said it. Like this, stuff can be really esoteric, and I don't want you guys to get caught up. What I do here is I try and give you the information, because we come out here to make more money, but we don't sit here and improve our knowledge in these subjects. We just say, oh, LLC can do this. Oh, I need an LLC. LLC can help me on child support. Oh, let me do that. But you need to understand how how
Right.
how these structures, entities, and pivots and all this stuff move. And this is why I love to bring people on here like yourself, Desi, because that right there, man, was gold.
Yeah, man. No, I appreciate you having me on here, and I know with the LLCs too, you could take out different loans for businesses as well. That's not,
Hmm.
I don't want to say directly tied to you, but
Yeah.
it's not something that it's for your business, right? And I think that we get caught up on I want to open up a business, but I don't have enough to do this, and
Yeah.
we're not looking at all different options that are available for us there.
Let me ask you a question, because you just made me think about this. Because I do know, like what I was suggesting with buying the insurance policy in your LLC, you can, if as long as it's a whole life, you can borrow the like you're front loading it, right? And for those who don't understand, front loading, it means that let's use the tax example again, right? If your tax bill is $2,000 and you want to get that expense just to have that expense for the so you don't have to pay the IRS, so to speak. We're gonna talk like this.
Hmm.
You need that full $2,000 to get the policy front loaded so you can borrow the $2,000 whenever you want, right? So what I really I have a point here, I promise. If if I'm a company driver just starting out, or I'm somebody who's watching this and I am a company driver, but I will be going lease or whatever the whatever guys do. Um, if I get the life insurance policy now, uh, in sometime in the future, I could borrow a certain amount depending on the policy itself to help me, maybe with a business expense, or maybe get a truck or anything that life might throw at you. Correct?
Yeah, man,
You want to
definitely.
speak on that a little bit?
Yeah, yeah, definitely. So let's say, for example, if you're able to put like you can set it where you do an initial, like let's say you got to pay $2,000 back, right? If
Hmm.
you do an initial $1,000 and do 1,000, the other eight or the other 10
Okay.
over 10 months or so, you can utilize that, and then any amount that you're able to spend onto it, like after a year or so, whatever, pretty much whatever you've put in is going to be available there as a cash option, right? And depending on what your goal is, it could actually compound in interest. So typically with the two of our companies, we're seeing about a 6 to 8% rate of return. So whatever you're
Okay.
putting into it, because it works with index, it's not directly with the stock market, but it works with indexes within the stock market. So you're never really gonna lose any of your money, but you can participate on the gains. You're not gonna get full gains as if you have a 401k with a 20 or 30%, but a 6% of safe growth, right, without any risk of loss. I think
Right.
is very great. And we also work with 401ks too. So if there's anybody that needs, we help with a little bit of everything. I
Right.
just can't help you with car insurance.
Let me touch on something real quick. Are there anything that would disqualify somebody from getting life insurance? Just because, I mean, again, I'm going to reiterate, truck drivers aren't the most healthiest people.
Right.
If there are, what would they be? And then how? I have a point, and I'm going to talk about it later, but I want you to kind of touch on this subject first.
Okay. Yeah. So, like all life insurances, any type of major medical health condition. So, let's say, for example, you currently have cancer, right? You're not going to be able to qualify, or if you've had a heart attack within the last year, we have different products that can qualify you. And then after it's been more than a certain amount of years, then we can get you on a different product too. But pretty much HIV, AIDS. If you were on kidney dialysis, which I don't think you would be driving trucks, but
Yeah, you'd be
um,
surprised.
yeah. So any type of like kidney disease, cancer, heart attack within a year, HIV is pretty much automatic disqualification.
Okay,
But
that's
outside of
interesting.
that, if you're taking high blood pressure medication or metformin, anxiety or anything like that, that's the new norm now. So, because for
Whoa.
a lot of the medications, about 70% of people are taking the same ones, right? So it's
Oh,
it's more of a new standard more than being unhealthy, if that makes sense.
that's interesting.
Yeah. So a lot of companies take you if you have high blood pressure meds. It just can't be more than three.
That's interesting. I guess it tells you how unhealthy our society is. Just
Exactly.
I'm
That
just saying.
that's what I'm saying. That's the new norm. It's not unhealthy anymore to be on one or two meds
That's
for
crazy.
high blood pressure or anything. But yeah, man. And the thing is that I feel like a lot of people think like, oh, I'm taking this medication, I'm not going to qualify, or if I do, it's going to be $500, and I don't have that. That's all not true.
Yeah,
Right?
and they don't even try.
They don't even try, right?
Um, Now let me ask this because I read this book called, what is it? Killing Sacred Cows. I don't remember, but he was talking about in the book that if you are uninsurable, whether through the whatever disease you might have, right? That you can actually, because it was talking, it was more of a tax kind of strategy kind of thing, but it was strictly kind of geared around infinite banking, and we can talk about infinite banking in a moment, because I do want to give you that airtime for that, because a lot of people, I'd be surprised how many people don't know and understand about that, and we touched on a little bit, but not quite in
Yeah.
depth as you're going to. But the insurability, if you're uninsurable, that what you would do at that point is, if you have a kid or something, get a whole life insurance policy, uh, make the payments, maybe front loaded, because I think the Rockefellers do something like this. Uh, they get the policy on the younger child.
Right.
They front load it, however high the policy is going to be. Uh, but let's say you're making the premiums, right? And let's say on your child, let's say it's 10 years and there's, I don't know. I mean, I'm not good at the math on the life insurance stuff, but let's say it's $50,000,
Hmm.
and you want to start a business or buy a truck, like you're able to do that kind of thing. That's correct, right? Like you can do
Dude,
something like that.
that's super smart, and you're not even in insurance yet, man. That's awesome. I actually
I
help.
study a lot, man.
That's awesome, dude. I actually helped a client with something pretty similar, but it was for his wife, because he couldn't qualify. But yeah, I mean,
Wife, cousin, something
so
like that.
yeah, so you can take out, so like let's say for example in that scenario the wife had to sign off on it, right, because the policy was going to be on her. But
Right.
um yeah, I mean, you can take that, and he's the owner of the policy. So any cash value or anything that's accumulated, the owner would be able to withdraw, move however they want to. And actually, a lot of families utilize that for kids, younger kids or grandkids for college too, right?
Yeah.
So they pay a certain amount. By the time they're 18, they're gonna have, depending on how much they put in, but let's say, 30, 40, $50,000 in there that they can utilize for college or utilize however they want to. And I think that that's something super, super important, that a lot of people aren't aware of. But
Yeah.
you could definitely do that you mentioned, man.
And guys, you can do this and still within the tax strategy with the LLC. Uh, I just wanted you guys to know that. I didn't know if Desi knew about that or not. Obviously he does, but a lot of people don't know about that kind of that you can actually do it on another person, away from you. You want to talk about infinite banking, man? But I don't know how much more time you got, but we're at 49 minutes, so let's kind of
Let's
we'll,
let,
we'll
let's just
we'll
keep
get off
going.
at an hour.
Yeah.
But go ahead and talk about infinite banking because I know you really wanted to touch on that.
Yeah, man. So it's so with the infinite banking, it's pretty much a whole life policy, but it's an index universal life, right? So
Index
what we would do
universal.
with this type of strategy is we would do the minimum required life insurance benefit, and we would do the max accumulation benefit, right? So all that would mean for you is essentially, instead of having like a $250,000 death benefit, your death benefit might be 100K, right?
Okay.
But what's going to happen is, instead of, let's say you put $100 a month, right? So if $100 a month was going to cover $250,000 of life insurance, instead of that $100 going towards 250 and only a small portion going towards cash accumulation, only we're gonna do it at $100,000 death benefit with the minimum death benefit. So that $100, less is going towards the death benefit and more is going towards a cash value growth,
Right.
where it can compound interest. And with that, pretty much, instead of, like, let's say for example, if you put your money in the bank, it's great. At least you're not going to lose it. But the thing with that is, with inflation and everything that's going on, you're not really gaining any percent on it. So if you got 10, 15, 20 grand in the bank, you're getting a 0.0001% return, which is probably going to give you $1 a year, right?
Yeah.
So, and I'm not telling you to go put 20 grand in a life insurance policy, but you can do it on a month to month basis, right?
Yeah.
So
Premium
if you
style.
were to, yeah, I mean, if you could put $100 into a life insurance policy over a year, you're gonna have the same amount of cash value that you would have had in your bank. And then in a few years, maybe year two, now you're going to start getting a few more interest, because now you have more money in there, and now you're just going to keep growing. So whenever you need to withdraw any funds as well, you can withdraw any funds, and utilize them however you want.
You just gave me a very interesting concept just now. Um, I want to see your opinion about this. I'm sorry, I don't mean to interrupt you like
No, man, you're good. That's what we're here
that.
to talk, man.
If I get the life insurance policy, say in an LLC, right? But let's go with the, I don't know if you heard this terminology before, an overfunded life insurance policy, whole life insurance policy. You ever heard
Yep.
that before?
Yeah, that's what I'm talking about.
Okay, right. Okay, right.
Yeah.
Okay, so we're on the same page.
Yeah.
But you're using that as for the deduction on taxes to offset your taxes every year. Let's say you set it to your premium equals. I mean, I don't know how the premiums necessarily
Right,
work
right.
yet, but let's say
Uh-huh.
the premiums add up to $4,000 to $5,000 a year. That's a deduction for the business. It's overfunding this life insurance policy that you can borrow out against later for future business endeavors. If you caught what I just said there,
Right. Yep. Yep.
that could really be implemented, couldn't it? In
Yeah, you could.
this. Oh
Yeah.
wow, man, you just gave me a nugget there. Anyway, I'm gonna get off. I ain't gonna say that though. But anyway, go ahead, continue,
Yeah,
man.
man,
My
you could
bad.
you could definitely use that, and it'll also be tax free because it's after
Yeah.
tax dollars, so it's not like you're
Damn.
paying taxes on it, right?
Hmm. Okay. Okay. Um. Well, I really at this moment you got me thinking about that. So I can't even think of any more questions I was going to ask you. But just let's give people any information that so they can reach you at, get a hold of you.
Yeah.
Like let's get you out here on this internet, man. Because I think you're sleeping right now. Because the game me and you talking about, I think you really help some people out. Really, real deal. Be honest with you, man. Give yourself a shout out right now.
No, man, definitely appreciate you having me on here. Yeah, guys, if you want to reach out to me, you can call me or text me. My phone number is 863-618-8514. You can also add me on Instagram. My Instagram is Desi, spelled Desi underscore ABARCAA. So it's two double A's, just like my name on here, with the underscore in the middle. And then just, the last thing I wanted to say, guys, is it's not very difficult. I think that anything that we do that's new or different, we're always going to be a little bit cautious about, which is completely fine.
Yeah.
But I do want you to know that we're going to do everything that we can to explain, educate, and let you make the decision to make sure we can put you in the best position. And I know we covered a little bit before, but we can start with something small now, and as things change, situations change, we can always increase it later on as you see fit. But we just want to make sure that we go ahead and change this whole cycle of the generational wealth, because we're not doing it in certain generations, right? It's only going on in certain specific ones. And I think that if we change that, we'll put our kids and grandchildren in great positions too.
This whole system, people we're playing they're playing chess out here, not checkers.
Right.
Um, but I might, you know what, man, we might need to do a part two for this, because we ain't even gotten to annuities, we ain't gotten to health insurance, we ain't gotten to a lot of different stuff. We might have to have a part two, man. We'll see how this
Yeah,
video does,
definitely.
and
Well,
if you ever want to make any content with me, man, you know how to reach me, all right?
all right, brother. I appreciate you having me on, man. You be
No
safe.
problem, man. You have a good one, man.